Tip number 6 to shield your short volatility capital is to use stock replacement with options rather than the ETF itself. So this is the email that I sent out on June 24th, 2025. Now here you'll see that the dial is pointing to the SVXY section. The previous day we were in gold, but now we have to shift back into the SVXY. So you can see sell the GLD gold and buy the SVXY. But if you look down here at the bottom, you can see that there's actually instructions there for the stock replacement trade as well. So long SVXY for people who prefer ETFs is super easy. It closed at 49.89 and we opened it at 42.22. That's a profit of 18.17%. So that's a really good stretch of performance. But now how would that VXX 55 strike put option have done? The put option was bought for $13.50 and it was sold for $22.40. That's a straight up profit of the put option of 65.93%. But because options trading itself is extremely capital efficient, we have to do an allocation adjustment and scale the trade based on the price of the VXX on the day it was opened. Remember, it was trading at $49.15 the day we started, and one option contract equals 100 shares of the underlying. So the option trader could have bought one contract per $4,915 they have available for trading. The option trader would have made $8.90 per one contract. That is a final profit per contract of 18.11%. Remember I said options trading is very capital efficient. That option contract only costs $13.50 per contract to open, $1,350, and that's scaled to $4,915 per contract. That's 27.46% of actual capital outlay, and the rest is still in cash. With a long put option where you're paying a debit to open the trade, no matter how bad things get, you can only lose the premium that you put up. Even if there was another full-on apocalypse or just the worst case scenario you can imagine, you can't lose 100% of your capital like you technically could with stocks or ETFs. For capital efficient options, that trader had a maximum loss of about 27%. So very similar performance, but with reduced risk.